Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform as well as running an educational company and swing trading full-time. In this video, as usual, I will be giving some more free value for all of you. We will be making some multi-time frame analysis breakdowns as well as covering what hedge funds are doing on the pairs that we will speak about. So what we have from a COT perspective and what we have on the COT data for these pairs. Without further ado, we will get straight in the video and provide some free value for all of you. And make sure you watch it until the end because as usual, there will be a lot of key concepts to extract from the video. Okay, so what kind of situation we have at the moment on GBPUSD? Now, why do I want to speak about GBPUSD? I want to speak about it because it's a pair that we spoke about in the last video that I made on YouTube. So basically, I want to make an update on it. So what kind of situation we have? The first thing, if you remember what we had from the daily perspective is we had a market that was at the moment retesting this very strong confluence zone. If you remember, we said we want to see the market from here go and retest this area and then make a push to the upside. And why were we so bullish and we are so bullish on the pound? Well, if we go and see what basically hedge funds have been doing on all GBP pairs lately, they've been adding a lot of longs. We basically hedge fund non-commercial, so big speculators in the market, aka hedge funds, basically they had around 38k long positions. And as you can see, they were building and building and building and building their long positions. So from 38 to 68k net long positions. And if you look at their shorts, basically they went from 77k shorts all the way down to 37k shorts. So a massive amount of shorts closed. And if you look at the net positions, we have an amazing shift. We went from minus 52k all the way up to 31k net positions. So pound was getting extremely strong. Now here, these are the non-commercials for GBP, but if you think about it, GBP is traded obviously on the spot against USD. So this is actually GBPUSD. So their hedge funds are massively bullish on this pair. Okay, and that is why basically we were looking for this long. That has already started. Okay, the market clearly rejected this level. And we have another important thing that we have to speak about. Basically, what happened, this structure level also broke to the upside from a daily perspective. The market has now created this W formation, so we will expect a retracement inside of this area and then continuation to the upside, because obviously that is the pattern. If you see the market create a W formation, you expect the market to go for a retest of the neckline, aka previous resistance turn support, before the next continuation to the upside. So this is what we have basically on GBPUSD. And if you go on the weekly time frame, we could also see that basically clearly from a weekly perspective, we definitely expected the market to make this push to the upside. Why? Because from a weekly perspective, we clearly have previous resistance here, turn support, already respected once with this candle here, and then again respected another time, confirming that overall we want to see the market make a push to the upside, and the market already started it. And if we take our Fibonacci from the low to the high, because as usual guys, if you want information on this retracement, you have to take your Fibonacci on the impulse. And in the same way, if you want information on the next impulse, you have to take your Fibonacci on the retracement. It's how the most accurate way to do it. And as you can see, basically there is something that doesn't surprise me. In fact, the 78.6 is lining up perfectly with this area of previous resistance, which is now support, meaning that we have a strong confluence zone, which is something that definitely you expect in this kind of situations. You want to see always the market, the puzzle always complete in the market. You always want to see clustered zones in which most of your technical tools will actually show that we have a sensitivity to either buying pressure or selling pressure. Now, this is what overall we will be doing on GBPUSD. So if we go down on the 4-hour time frame, what kind of situation we have now on the 4 hours? Basically, the market has been just impulsing to the upside. Okay, from here we went up, down, up, down, up, and now what kind of situation we have? We have a market that here, as you can see, has a very strong structure area, resistance, again resistance, again resistance, and here we have support. And anyway, what will be our game plan basically with the students? What we will be doing, we will be waiting for a little bit deeper pullback to complete the W formation as we said, and then we will be monitoring again price action on the 4-hour time frame for a potential long opportunity. And if the market will provide us on the 4-hour time frame one of our bodied entries, then we will definitely be interested in this long to the upside. Obviously with a minimum 1 to 3 risk to reward. Why a minimum 1 to 3 risk to reward? Because if you have always a minimum 1 to 3 risk to reward, you only need to be right 3 times out of 10 and you're still in profit. That is the most basic rule that every strategy should have. And so this is overall what we will be doing if and only if the market will satisfy our rules inside of this area on the 4-hour time frame for a long opportunity, then we will definitely be taking this long. Now, another pair that I wanted to speak about was basically Euro NZD. Now, basically what we have on Euro NZD, the last time we spoke about it, the market had created this overextended M formation to the downside. We expected the market to go and make a retest of this level. Why? Because it was the neckline, aka previous support, now turned resistance, and we expected the market to make a push to the downside. Now the market made a first rejection, then went for a fake breakout and closed back below. Now what do you expect in this kind of situations? Now if you see a market that it doesn't matter if it's a trend line, it doesn't matter if it's a horizontal level, if the market makes a fake breakout in general, it will go for a retest and then continuation to the downside. So if you think about it, the head and shoulders itself is simply a fake breakout because you have a first test, fake breakout to the upside, breaks back down, then you go for a retest and the continuation to the downside. And that is exactly what happened here. This is the resistance level. The market hit it once, went back down, fake breakout to the upside, broke back down, retest, continuation to the downside. Everything is, in this situation, this is just normal procedure in the market in this kind of situations. So overall, from a daily perspective, we expect continuation to the downside. The overall downside target is here. If you take your Fibonacci from the high to the low, as you can see, this is why we have our target here. The minus 27 of the fib taken on the previous leg shows this downside target. And if you look at what we have from a euro perspective, this is a little bit against a negative confluence that we have. That is why we have to be extremely cautious with this euro NZD trade, because if you look at it, basically they have been closing their shorts positions, meaning that overall we can expect continuation to the upside on Euro NZD. Why? Because while they were closing, actually, this is Euro USD, okay? And if you look at Euro USD, I will now go straight into it. You can see that Euro USD was actually going to the downside. And they were closing shorts instead of adding them, meaning that they expect Euro USD to make a push to the upside. And when I say they, I mean hedge funds. So basically they expect Euro USD to make a push to the upside. And Euro NZD is correlated with Euro USD, so we have to be extra cautious of this trade, and we're perfectly aware of it since we are in the trade. So meaning that we might go risk-free very soon. And what kind of situation we have is, since I was speaking about it, let's speak about what we have on Euro USD, which is a pair that I want to speak about with you. Now, I want to make a full breakdown on this one. So starting from the monthly time frame, I want to show you basically what we have. So if we start from the monthly time frame here, what kind of price action we have. Now, the first thing that should appear basically immediately clear to you is that this is a very strong structural level. This extremely strong support here, turned resistance, the market broke above and closed above with this green candle, this one here. So last month, so the last monthly close that we have is actually to the upside. Very important to say this. Why? Because the buyers might want to try to protect this previous monthly close above it. Basically, they don't want to create, they don't want it to be a fake breakout, but want it to be a real breakout, meaning that what needs to happen? What needs to happen to have a confirmed break above is that basically this candle actually goes and closes back above the level. So all this red that you see here actually becomes a wick because the market goes back up and closes above this structure. Now, if we go down on the weekly time frame, there is another thing that we can see here from the weekly. Now, first of all, on the weekly, do we have any kind of confirmation that the market is actually ready to make a push to the upside? Zero. We have no kind of confirmation. Okay, the only thing that we have, and is really the only thing, is basically we have a market that has basically broken this trend line to the upside. But again, this weekly candle is now below the trend line. Now, if this weekly candle will close back above, then this trend line might make sense, but this is not a high probability trend line because it has only 2 touches, okay? This is kind of respected here, but this is more a rejection of the previous high. This is not a good trend line. So on the weekly, we have no confirmation for the push to the upside. And if we go on the daily time frame, what do we have? Now on the daily, this is where things get interesting. Now from a daily time frame, first of all, I want you to realize this. From here, the market has been trending to the downside. And you can't argue with this. The market has been trending to the downside. Now, if you go and see what you have from a COT perspective, so what hedge funds were doing while EURUSD was trending to the downside? They were closing their shorts. Now, if a market is going down, you're supposed to add more shorts. Instead, what they were doing, they were closing their shorts, meaning that they just wanted the price to go lower to then buy. Basically buy from a better price, because as you know what banks do, they buy low and sell high. So EURUSD from this point of view has a very good potential very strong basically probability of making a push to the upside, but there is one major thing that needs to happen, and it's basically we need to see EURUSD break this zone to the upside, because what you can see here is previous support now turn resistance acting perfectly, and the only way that you have to basically see the EURUSD make the push to the upside is to see a daily break of this area back to the upside. Now, if you count the waves from here, we have 1, 2, 3, 4, 5, meaning that the market might be actually ready for this move, okay? But still, we don't have to predict, we have to react to what the market gives us. So what we have to do here, we have to wait for the market to break this area. Now, if the market will break this area, then what we will have? We will have this W formation. And after a W formation, what do you expect? After a W formation, you expect the market to make a retracement. A retracement to where? A retracement to the structure, which is at this level here. So what we will be doing with the students? What we will be doing with the students is basically waiting for this move, then waiting for the retracement, and then that is where basically we will have our best probabilities and best risk to reward for the push to the upside. And as you know, trading is all about probabilities and risk to reward. And at that point, we have all our odds stacked for this nice push to the upside. We will also have some very nice bullish structure from a daily perspective. And from here, we will just be waiting on the 4 hours for one of our valid entries and basically for the rules of our strategies to be satisfied. And then we can definitely be looking at this long position. A long position to where? Well, the first target will be just taking your Fibonacci from this low to this high, which is the previous leg, identifying the -27 at this level. So this is the first target that we will be looking at, which is a target that makes a lot of sense because as usual, things will combine in the market if you're analyzing it in the right way. And what you can see is that overall we got our -27 that is exactly at the previous high. So also from a structure perspective is a resistance level. And what Fibonacci is supposed to give you is simply more confluence and showing you which are the strong structure levels. Now in this case, we didn't need Fibonacci. It was already clear that this was a strong structure area. And the last pair that I want to speak about with you is AUD/USD because I spoke about it in a couple of videos ago, or actually even in the last video here on YouTube. And basically, what is the situation that we have now? If you remember, what we had is this situation. The market was here and we expected the market to make this manipulation to the downside. Now, why? Why do we expect AUD/USD to make this push to the downside? Because once retail traders basically see this move, okay, they see the break to the downside, they see the retest, what do they expect? They say, okay, the neckline is broken, we expect the market to go down. And that is where basically hedge funds will take all their money. They will bring the market back up, and then the market will explode to the upside. This is something that happens over and over again. Now, will it happen this time? I don't know. That is why you have to be reactive and not predictive. But the important thing is that you don't trade with the crowd, okay? If you see something that is written on a book, don't trade it. Now, what you see here is overall, the market did break and already retested this level. Now, how can we get our confirmation that actually the market will make the push to the upside and all the people that have the stop losses above this area will get out of the trade and will basically trigger even more liquidity for the banks to actually buy more? Now, what we need to see here is we need to see the daily on the daily time frame, the market close back above the area. If we will see a daily close back above the area, then what we will have our fake breakout, we will have our inverted head and shoulders, but in this case, they already grabbed the liquidity here. All the people that are shorting here, they will be using those shorts to actually buy, and at that point, basically, there will be all their orders stacked in this pair, and we will see that basically clearly reflected in this COT data that is already getting bullish, because if you can see, basically we went from minus 46k net positions all the way up to minus 20k net positions. So overall, they are closing their shorts. We went from 87k shorts, we now have 64k shorts. Think about it, the price is going down and they're closing their shorts. Okay, so that is a very strong indication that overall we might really get this push to the upside. And if you look at what we have on the longs, they haven't added their longs yet, but now we're starting to get the liquidity to actually buy here. Okay, so they might be adding their longs exactly in this moment. But what are we supposed to be doing? Simply reacting to what the market is giving us and not predicting. So waiting for this break. If the market will break to the upside, then waiting for this retracement, because there is where you get the best risk to reward and best probabilities, and there is where we will be monitoring with students for the push to the upside. And if the market will satisfy our rules for entry inside of here, we will definitely be looking at this long with a very good risk to reward and really good probabilities.
If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free analysis and education for all of you. And make sure you go and check out the mentorship program by clicking on the link below, because you will see what the mentorship program actually includes, which is all the rules of my strategies, and then basically trading the strategies with me each and every day, and having me answering all your questions every day, including the weekend. Okay, my commitment to teaching is very, very strong, and you can ask that directly to my students. So without further ado, I'm looking forward to see you on board the mentorship program, or at least go and check out the next video.